coming up today on the Prosperity Nation podcast.
But most people don't know that because society and the IRS is all driven to get you a tax deduction right now. And yes, that will save you taxes right now. But when you go to take that money out, you will pay the taxes on it then. Welcome to the Prosperity Nation podcast. I'm Angie.
And I'm Elise.
And we're glad that you're here. Thanks for sticking with us. It always surprises me when people keep coming back, and I love it. But, I always think nobody cares what I have to say. But we're having a lot of fun here, right, Elise?
Yeah. It's a lot of fun, yeah. I enjoy it, so I'm hoping everyone else does.
Right. Well, you and I are having fun. What the heck?
Who cares if no one listens? Just kidding. We want people to listen. But
yeah, we do care. So, hey, what happened to the T-shirt you were wearing earlier? Like, you got all fancied up for the podcast today.
I know. I have this moral dilemma. I'm just such a T-shirt and jeans type of girl, I don't... But, it's a podcast. I feel like I have to dress it up a little bit, and it's just this internal battle I have.
What, aren't you one of those stuffy CPAs or what?
Oh, God, no. I you met me just on the street or, out and about. Well, most of the time when I meet people, then when they ask what I do, they're actually incredibly shocked. One person, no joke, this is a quote, said, "You seem too alive for that profession." So that's quite a compliment or an insult, but I'm just taking it as a compliment. So,
oh my gosh, could you imagine what their vision of what you should look like as an accountant?
It's sad. I don't know why. In order to be, I don't know, not admired, but expected to be doing good, you have to have this button up and, be all stuffy and nerdy. I don't know. Conservative.
Hey, we know for certainty that we are not the typical CPAs. I know. I get that. I am not either. I was saying earlier, I even wore my shirt that showed my tattoos today for the client. Okay, I got to loosen up too.
So how many tattoos do you actually have? I don't think I've ever asked you this.
Oh, that's a great question. Does it count when I have a tattoo and then tattoo around it and then around that? Because my arms are getting pretty covered when you get down to it.
Let's do this. If they were done separately, then count them as separate.
Well, there's about 8 separate ones. But here's an interesting story. I never told this story before.
I want to hear it now.
Yeah. Okay, I had 5 totally different tattoos before. And I had them all removed. So get this out. Get this story. When I first started as a CPA, now that I'm thinking about this is where it all started from. When I first started as a CPA, I worked in a big firm. And I was transitioning from biker chick at the river with keggers and tattoos and smoking and all that stuff. I was transitioning out of that world and into this corporate world that I've never been in before. Very conservative, very much, blue shirts and, the look as an accountant. And so I'm I should probably get my tattoos removed, because I was covering them up. I had them on my wrist and stuff. So I was covering them up at every meeting. And so I went on the journey of getting all my tattoos removed. Now, that was a freaking pain. Oh my God.
I heard they hurt more than real, getting the tattoo. I heard getting them removed is worse.
It is so much worse. So I did it for 8 years.
Oh my gosh.
8 years of going back in and getting the laser on the tattoo, which, by the way, my biggest tattoo I had just covered up because I got divorced. And of course it had his name. I know I shouldn't have, but this is my story. I was 16 when I got married. On our 1-year anniversary when I was 17, I got a tattoo with his name. It was a big deal, right? So I covered it up when we got divorced. And so now I have this tattoo that's a pretty big tattoo that has 2 layers of ink on it.
Oh.
And then a year later, deciding to take them all off. Now, this is how tattoo removals go, is that there's a laser that breaks the ink up in your skin, right, so that your skin can absorb it over time. So in that process, it creates heat. And that heat can make your skin blister from the inside out.
Oh, gosh.
So here it was for 8 years being tortured doing this.
That sounds horrible.
Yeah. It was horrible. I literally, like, all through my 30s, completely transitioned from one world to another world.
Wow.
And then in my 40s, I go, what the heck am I doing? Like, this is who I am. I love tattoos.
Yeah.
And started putting them back on.
Oh, I love that. That's a great. Thank you for sharing that. I didn't know any of that. So that's awesome.
Yeah, that's my little secret, you know. So I'm still like, even now, even a little bit later in my life, I'm like, why am I still covering them all up? And literally, these last few weeks of doing, this transition and helping my mom, it was so hot, and I was just wearing tank tops, and for almost 2 weeks straight, I just got to wear tank tops without covering up my tattoos, and it was a weird feeling. Like I was like, oh, I'm not hiding them. So today, here I show up at work, and I'm not hiding them. So here we go. That's the story.
I love it. That's awesome. Well, no, we're not stuffy.
No, we're not stuffy. And that kind of leads into our topic. Not really, but whatever. Our topic is retirement again this week. But, our philosophy on retirement is, what does retire mean? It means stop doing something, right? You're retiring something, you're putting it down, and you're moving to something else. We believe in retiring now. Like, stop doing jobs you don't love. Stop being somebody who you're not. Or,
I think a lot of it is stop pushing off everything you want to do until you, quote, have time because you're not working. It's like, and I think that's what people do. Their idea of retire is like to travel, but it's like, why can't you travel now?
Exactly. That's why we, this mobile global CPA firm, like, right. I'm traveling now. I'm not going to wait till later in life. I'm going to do it now and make my life something I don't feel like I need to retire from. In this topic, we wanted to touch a little bit more on some technical things, in this episode. We do talk a lot about the goals, and that retirement is most people's biggest goal that they're shooting for. But we wanted to focus a little bit more on the retirement vehicles. And how do you put your money into retirement vessels or vehicles or, entities or accounts or whatever it is, so that you have the money available for when you actually retire, right? So, we wanted to talk specifically about what is an IRA account, or what are these different vehicles. And I brought up the subject to you, Elise, about, wait a second, most people do this for tax reasons, right? Isn't that what you experience?
Yeah. Every time we do returns every year, they always ask, like, should I contribute to my retirement account so I can save money on my return? And I'm like, is it really worth it? It's like the $1,000 or something you're going to save, but then you have to give out like $6-7 grand. Like, I don't
Doesn't
know.
make sense to you?
It doesn't make sense to me, really. Just hang on to the cash and do something else with it. I don't know.
Yeah. Well, I get it, because you have to give up the cash to get the tax deduction.
Yep. Or else you get penalized, I think, right? If you don't pay, and if you get the tax deduction but don't actually make the payment, then you get penalized. So you have to do it.
Yeah, exactly.
Or pay more.
Then that would be fraud. That might be a big penalty. You'll be seeing Elise in jail.
Yeah, I didn't actually think about that one. I don't do that for the record.
Okay, good. Yeah, Elise, can you put down on my tax return that I made a $50,000 IRA contribution, please?
I mean, if they say they're going to do it, then I do it. Like, I put it down, but obviously, like, it's on them to actually follow through.
Yeah, exactly.
But anyway.
And that's the other point about it too, is that, I said 50,000, like, wouldn't that be nice to be able to get tax deductions for all your money and put it away for the future? But no, because they limit it.
They limit it.
Yeah, a lot. But well, that was great. What
were you trying to?
There's our blooper our producer was wanting us to do. Oh my God, is right. Okay. Here's the thing about the IRA accounts. What most people don't know is that it's not benefiting you. And it actually can harm you. And you'll pay more taxes in an IRA account than if you just put it into a brokerage account and save it yourself. But most people don't know that, because society and the IRS is all driven to get you a tax deduction right now. But what happens with your IRA is, yes, you get a tax deduction right now. And yes, that will save you taxes right now. But when you go to take that money out, you will pay the taxes on it then. Okay, equal is equal. If the tax rates were the same, There's no difference whatsoever. You either pay it now or you pay it later. And of course, yeah, you get the benefit of your own money if you don't pay it now. But the problem with the IRA accounts is that it converts your growth from capital gains rates to ordinary income rates. So what does that mean? If you buy a stock, let's say a Chevron, in a brokerage account, and you pay $10 for it now, and you save it for 20 or 30 years, and now it's worth $100, you pay capital gains on that growth. $90 capital gains. And the capital gains rates are much lower than the ordinary income rates. In some cases, it's a 17% difference on that. But when you put it into your IRA account and you take it out later, every single dollar comes out at ordinary income rates. So if you put that $10 into your IRA now and it grows up to that $100 in 20 or 30 years and you take it out, $100 gets taxed at the higher rate.
So now, okay, that makes sense, but why do people talk about having the tax, what is it, like the Roth IRA? Is that what I'm thinking of, where they don't have the tax when you take the money out?
That's right. That's right. So Roth IRA, which, by the way, okay, I know I'm supposed to be an expert. I'm not an expert in all things personal finance, because I tell you, I didn't even know what a Roth actually meant. So I had to chat GPT.
But does anybody?
No.
Does anybody even know?
No. So here, look, I'm just going to tell everybody so they do know. And I'm just reading from chat GPT right now, okay? That a Roth IRA is named after Senator William Roth, blah, 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 in the Tax Relief Act of 1997.
Oh.
So there you go. It's named after a senator.
That's not that long ago.
No, not really.
Wow.
No. But what a Roth IRA does is it allows you to put money into the retirement account now, but you don't get a tax deduction for it. So when you take it out later, you're not going to pay tax on it because you never got the deduction in the first place.
But you still are capped at what you can contribute, right?
Right. The caps are the same. You can still only put in a certain amount depending on whatever the IRS tells you is allowed for that year. If you have programs that go through your business, you can deduct more, etc. But it is all capped. Why? Do you know why it's capped?
Tax reasons? I don't know.
Yeah. Ding, 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 ding,
wow.
ding, ding, ding.
I mean, I feel like that's always the answer.
Exactly.
Something you have to do with the government and taxes, and either they want more of it, or
yep,
that's about it.
That's right. They either want their money or they want to control the social behavior. That's what it's all about. In this case, they don't want all of our money going into where we're not going to pay taxes on it for 20 or 30 years. They want the money now. So they limit how much we can contribute and get a tax deduction for it. Or even a Roth IRA is still limited because whatever you put into it, you don't pay tax on while it's growing. And so they will lose all that tax until you take it out. And they just want their money. It is that simple.
So now we got the IRA and the Roth. Now and here's another thing that I get a lot with the clients. They confuse those with the 401k. Aren't they the same thing?
Seems like it would be, but no. So what does 401k even mean?
It is a tax code.
It is a tax code. That's right.
Yes. 2 for 2.
That's right. People don't even know that actually, if you read the tax book of tax codes, it will be section number 401, section K. So, but a 401k, what that does is it allows employees to make contributions into a retirement account as an employee. And an employer can have a retirement account that it contributes to on your behalf. And then it adds the 401k part to that so that you can also contribute. And, the way it works, just the practicalities of it, is the employers will do matching contributions. So it encourages you to do your max, and then they will pay you basically for saving that money. So why? Let me ask you this. How about 3 for 3? Here's another question. Why does the government want you to put money into a 401k or a retirement account of any kind or an IRA? Why do they want that?
Because it's guaranteed tax money in the future.
That's a great answer.
Oh, that's not it though.
No, that is part of it. But
okay.
But they want their money now, just like most people, really. But actually, taxes, almost all tax strategy, all tax codes, all bills that go through to the Senate or to Congress or anywhere to do tax adjustments have one focus, and that is whatever social movement that they want to see happen. So if they want people to buy houses more, they give more credits on, first-time home buyers, right? If they want to see businesses
cars
thrive. Yeah,
that was
what's
a big
that?
one. The electric cars. And the tax
exactly.
Yeah.
You get tax credits if you buy more electric vehicles or remodel your home with more efficiencies, things like that. It's all social. It's social guidance, social reform, social ways of directing society by incentivizing them by paying less taxes or getting money back on taxes, credits. So why retirement? Why would they care about that? Drum roll.
Taxes.
Taxes, that's the worst part. That video from the Monopoly kid.
Where he's like crying.
Yeah.
It's on Instagram.
Yeah.
I love
it's
that
on
video.
every social media. That's my favorite.
I know.
Anyway, taxes, that's the worst part of the game. Yeah, we know. It really is. But actually, back in the day, the companies, when the men would go to work, usually the woman would stay home and raise the family, and they would work in one place for 20 or 30 years, their whole career, and there would be a pension for them. And even before Social Security started, that's just how it was normally. Then Social Security was enacted, which to help that pension for people who either didn't have one or to have a little bit more money coming in. And then that pretty much has gone away. There's no companies that pay pensions anymore, hardly. Some of the big ones still do, but usually not. And that left the responsibility for all Americans to save for their own future and their own retirement. So you take away this benefit of having that money saved for you, so you have money in the future, and you put it on the responsibility of the people with no education, no training, and no skills of how to do it. So we don't know, we don't do it, we don't have this in our way of using money because, there's no money school. We say that all the time. We don't know how to save on our own because we just want to put money away for 30 years. We have to be incentivized to do it. The biggest incentive we get now is a quick fix on a tax deduction now, but we're going to pay more on it later when we take it out.
Well, and then you also have like inflation too, that now it's like, it's not even worth anything at the point we take it out.
Right. Well, and don't put it under your mattress because then that'll really be affected by it. Here's Elise's retirement. I got 10%. I'm putting it under my mattress this month.
I know. Well, I used to save cash and not like I would save it also. But one day I was talking to someone and like, why are you saving it? I'm like, I don't know. Because I like to have cash. But I thought about it. I'm like,
I like collecting $100 bills. It's really fun, actually.
It is, right? And then
it's kind of a game.
And you're like, look at all this money. But then the problem is
and
when
then
you
I
don't
just
actually
donate
spend
it. I just end up donating it. It's like, oh, shoot, I have $5,000 here. Okay, I'll donate.
Because you don't want to deposit in your bank account at that point.
Oh, right. The IRS is going to want to know where all the cash came from.
I know. Yeah. Interesting.
Yeah. So that it's all to help. Like in this case with the retirement, it's to help Americans actually build up a future for themselves because Social Security was never meant to last 30 years. Now we retire at 65, 67, and we could easily have 30 or 40 years even of Social Security. It was never meant to be that. When it first came into play, it was designed to start paying you out. I think it was at age 65, if I'm remembering correctly. But the life expectancy at that time was like 67. So it was only expected to last for like 2 years.
Wow.
So it was never intended to be a whole nother career of living off this government pension. And so that's why there's always been a problem with the Social Security. There isn't like a big savings account of Social Security money that we think we're paying into. It's not. It's just allocated and it goes to other things. And so there is no true fund there for us to tap into. So, there is troubles with it. And so the IRS and the government keeps encouraging us to learn or not learn to just save on our own based on tax motivation, basically.
So it's like they seem like they're being nice, but it's really for selfish reasons, is what you're saying.
Come on, this IRS, really?
And then they're going to tell you can only contribute so much. You can't exceed those amounts. But then you're going to have to pay a bunch of taxes later.
That's right. Fun game, right?
Yeah.
So here, my whole point of all of this too is that there's other ways to prepare yourself for retirement. First off, don't think about it as some time in the sky or, 30 years from now, I'm going to stop doing what I'm doing and start doing something I love, because it's going to be too late. Just live the life you love now and prepare for a trajectory that's going to feel comfortable and enjoyable for you. And that doesn't have to mean putting money where it's locked away. And by the way, you can't get that money out until it's retirement age anyway, or you're going to pay 10% penalty. So that money is gone from you. So, there's other ways you can do it with thinking about what you want and need and later in life, and start buying those assets now. And it doesn't have to be just stock market assets. It can be other types of assets.
That's true. Interesting. Well, I know I learned something, even though I've been studying some of this stuff. I feel like I learned something all the time anyway, but yeah, that was very informative.
Well, cool. And, it's a lot. There's a lot of pieces. But, we do want to hear we want to hear your stories, and we want to hear the questions, because if we can help you understand these things, sometimes it literally is just, what does IRA mean? What does Roth mean? That kind of helps, increase your awareness on these things. So we want to hear from you. What questions do you have?
Yeah, questions would be great. As always, our email is stories@prosperitynation.com. You can always follow us on social media, and don't forget to like and subscribe.
Awesome. All right, well, more to come. I'm sure we'll be talking a lot about this in the future as well, because, our goal is for prosperity, and prosperity means flourishing personally and financially. So we'll see you next time.
See ya.
Thanks for joining us today. Follow us on social media for the latest episodes, updates, and more. Like and subscribe to videos from us on YouTube, and find out more at prosperitynation.com. That's it for now. We'll see you next time on the Prosperity Nation podcast.